past few weeks, the independent oil and gas stocks have been put through the meat grinder. As the price of crude has been slammed by sellers who dump oil whenever the dollar gets too strong, the price of natural gas has fallen through the floor, down roughly 20% in the last 2 months, courtesy of a very mild summer. But I think you have to view this weakness in the independent oil and gas producers as a buying opportunity, because these companies are about a heck of a lot more than just commodity prices. Remember, we're in the middle of a domestic energy renaissance that's transformed American oil and gas producers into some of the fastest growing companies around. And that growth doesn't go away just because their products have come down in price for the moment. Hence our week-long series, Invest in America Behind the Boom. I'm giving you an exclusive look into some of the companies leading this revolution. Tonight, we're kicking things off with one of the best companies in this whole patch, Range Resources, RRC, the natural gas company that's basically focused on huge acreage in Pennsylvania's Marcellus Shale, along with exposure to Ohio's Utica Shale, the Nora Field in Virginia, of all places, the more oily Mid-Continent play in Oklahoma, and some relatively untapped assets in Texas's red-hot Permian Basin. Range Resources is among the lowest-cost producers in the space, with truly spectacular production growth. As Wall Street expects the company's total production to increase by 22% this year, by 27% in 2015. Yet with natural gas prices sinking 20% since mid-June, Range Resources' stock has fallen about 20%. Look, obviously this company makes less money when natural gas prices are weaker, but it shouldn't be a one-for-one relationship with the stock declining by nearly as much as the commodity. That's crazy given RRC's titanic production growth. I'm not saying the stock won't keep falling if natural gas continues to get killed. I am saying it's getting cheaper as it gets lower. So let's check in with Jeffrey Ventura, the president and CEO of Range Resources, joining us from Intercom's Oil and Gas Conference in Denver, Colorado, to hear more about his company and its prospects. Mr. Ventura, welcome to Mad Money.
Well, thank you. It's great being on your show, Jim. I appreciate it.
All right, sir, there is a sense among people who are rotating in and out of groups that they look at natural gas, they see how much this comes down, and they say there's no way Range Resources can make its numbers. Yet when I look at your production growth and I look at your cost of production, we shouldn't necessarily draw that conclusion.
Yeah, that's absolutely right. You know, one, we have a long track record of growing, doing what we say we're going to do. We have like you mentioned, the largest net acreage position in Pennsylvania, and importantly, in what we believe is a core area for most stack pays and for the liquids-rich part. So when you look at Range, you know, we really believe we can triple, and importantly, even if all things stay equal in terms of pricing for the short term, it's not all the same. You know, if you look at our ethane and propane contracts next year, for Range, it's more than a 25% uplift on our ethane and propane combined on 55,000 barrels per day. That's a huge uplift. It translates into more than $100 million increase in net cash flow for 2015.
And unlike a lot of other companies, it looks like that you've got pipelines everywhere. Some of the companies I deal with are really kind of locked in and can't get the stuff to market. You've got them everywhere.
Yeah, that's a great point. Range discovered the Marcellus back in October of 2004, so we're coming up on the 10th year anniversary. And very importantly, we recognized early on we had a huge opportunity, and we had found a huge field. So what we did very early on is put together a team to capture that. So we have the firm transportation, firm sales already set in place to enable us to triple, to grow from 1 BCFE per day to more than 3, and importantly, not only to triple, but to triple with some of the lowest cost firm transportation. We currently sell on 11 different intrastate pipelines into 21 different indices, so I think Range's portfolio is really better than our competitors.
I think that there are many people in this country who are used to companies' costs going up year after year. Your well costs in Northern Marcellus Shale Division down 27% less than a year ago?
Yeah, our costs are coming down, the quality of wells are getting better. Really, if you look at our total unit costs are coming down. Unit costs are down, you know, approaching 40%. So we've not only, and that's the beauty of, you know, we're in a commodity business, a resource business. What you want is a really high quality resource, high quality rock, that's something that you can repeat for a long time to allow for those technology changes and all that not only improve well quality, but drive down costs. So as our production's going up, we fully expect that the quality of the wells will get better and the cost per unit will go down.
Now, Jeff, if you had told me that there was a lot of oil and gas in Virginia a couple of years ago, I would say, well, that's a little ridiculous. I'm seeing you make some very big moves in Virginia. How large could that be for Range?
You know, Virginia we really like it. Right now, if you look at our footprint in the southern Appalachian Basin, we have 475,000 net acres. Importantly, we own most of it 100% working interest, and we own the minerals. And so we have 100% working interest, 100% net revenue interest. We own the royalty. Plus we own 1,200 miles of pipelines and 85,000 horsepower compression. We think we can grow that from 100 million per day, 110 million per day, and quintuple that to more than 500 million per day. Also, right now, the gas prices in Virginia are some of the best in the country. We're currently selling our gas there for 20 cents above NYMEX.
I see. Now, I just want to give people always get an impression. When I read about your company, I think that you can produce so much more natural gas than people realize, and it can be used in so many different ways. Where do you see us in terms of continental self-sufficiency, at least for natural gas? How much do we have, and can we even export it without a problem?
Yeah, the Marcellus Shale field that we discovered is by far and away the largest field in the United States. I believe ultimately it's currently about probably the second largest in the world, ultimately may be the largest. And we've taken that technology not only into the Marcellus, but into other gas fields. And the U.S. is now the #1 natural gas producer in the world. I'm not sure how many Americans know that. So we have the largest gas production in the world. And importantly, then we've taken that into oil, and oil production's climbing and imports are decreasing. So yeah, I think the U.S. can not only supply itself, but export gas. Range has actually signed already a couple of LNG export contracts, and the first of those actually should start up around the end of 2015.
Yeah, we're looking for it. I know you also have contacts with Cheniere. Well, sir, you've done a fabulous job, and your stock has come down, and it's just such a great opportunity. I want to thank Jeff Ventura, President and CEO of Range Resources. Good to see you, sir.
Thank you, Jim. Appreciate it.
This is the kind of company I'm talking about, down 20 quick points, okay? Is this the bottom? I don't know. It's clearly not the top, but look what they've got. Fabulous resources, declining cost to get it out, whole new areas they're finding. They haven't even touched much of the Utica. They've got so much in Texas. This is the kind of company that you can put away. Stay with Cramer.